Right, well, it's that time where we review trading activities at the Exchange Limited, and my guest is Mr. Tajuddin Olayinka, who is a stockbroker and an investment banker, for us to do this analysis. Good afternoon, Mr. Olayinka. The market is starting the week in green. No, sorry, it's in red. What is playing out again? It's still in red.
It's in red. We still have the two major factors, shaping the market, actually depressing the market. We still have it. We still have those two factors around, around with us. And that is the issue of the threat from the United States of American President Trump, and of course the other factor, which is a capital gains tax of 30%. So, why investors were initially so worried about capital gains tax, then this other one just came up and creating some kind of tension and forcing some insurance investors to actually sell, to engage in massive sell-off. So that's what we are seeing at the moment. It's just I see it as a temporary issue because the companies are doing well. Not that the companies are not doing well, but the threat from the U.S. president is enough to create tension around the market. Because if that threat comes to pass, then of course the companies won't be able to run their business properly. So I think that is what is causing this kind of massive sell-off we are seeing in the market.
Of course, that's always one negative, because investors react to feelers and messages like this one, and many are thinking about what will play out. But what about our local players? Are they also on the same page?
The local players also, they are not. They are just also been. They are also exercising caution, but then they form the counterparties to those who are, those who are selling off. So that's why we see some semblance of buy side in the market. We see investors taking position and buying some of these stock that investors are throwing away. So, but because they know what is happening. And we believe that once this issue is resolved, which we know it will surely be resolved, because Nigeria is not a small market for America to just allow things to go this way. So somehow they will resolve this crisis, and then of course market will bounce back. And once market bounces back, it becomes an issue for those who want to come in again, because they may not have this stock to buy at these current low prices.
Exactly, they might not be able to get it at that same price. So let us do an outlook generally for the week now. What are those stocks that you might personally say is catching your own interest, or might catch investors' attention?
Most of those liquid stocks are still, they are still available, and they are good to buy. The banking stocks, those stocks that are usually held by institutional investors, are still available, and the prices are still very low. So anybody who's looking beyond the threat from President Trump will be able to take advantage of these low prices. And of course, we also believe that representation is being made to government on this issue of capital gains tax. There is no need to impose that capital gains tax of 30% on the market, so in fact on share prices, because what is happening is that even when 10% was imposed, it was suspended. It was never implemented. So if you are going to start implementing capital gains tax, it shouldn't be that you have to go to 30%. That is also an issue, and I think government should be able to address both concerns.
I must thank you so much, Mr. Tajuddin Olayinka, investment banker, stockbroker. Do enjoy the rest of your day and have a profitable week.
Thank you. It's my pleasure.
Well, before we go, let's take you outside our shows. China's transport ministry says it will suspend port fees levied on United States-linked vessels for a year. According to the ministry statement, the suspension will kick in from today. China said it would suspend for 1 year special port fees on U.S. vessels simultaneously, with Washington imposing on levies targeting Chinese ships as a fragile trade truce between the superpowers continued to take shape. The United States and China have been involved in volatile trade and tariff wars for months, but agreed to walk back some punitive measures after President Xi Jinping and Donald Trump met last month in South Korea. At one point, duties on both sides have reached prohibitive triple-digit levels. hampering trade between the world's two largest economies. The suspension of the port fees, which applies to ships operated by or built in the United States that visited Chinese ports, began on Monday. Meanwhile, U.S. exporters of agricultural goods to China are optimistic that trade between the two countries will return to normalcy after a framework agreement reached last month by their leaders. Farmers and chairman of the U.S. Grains Council, Mr. Mark Wilson, said this while touring an exhibition points at Shanghai's Import Expo, including major agricultural players covering more than 430,000 square meters. During his visit, Mr. Wilson announced the first shipment of U.S. sorghum to China, a milestone in years. Prior to trade disruptions, 95% of U.S. sorghum exports went to China. U.S. Grains Council also signed contracts with Guangdong Zhongyi Agricultural Limited at the expo.
This exhibit center itself is just enormous, and with a number, I've never seen so many different countries in one place trying to sell things, so it's been an eye-opening experience for me. The past 6 months have been pretty difficult for farmers, and this gives us a little brush of fresh air. We still got to see what comes out of this. We still got to see some stuff moving. I guess there is some shipments of beans coming. You know, there's one shipment of sorghum going, so I know the sorghum farmers need a lot more than that. So it's a good start.
Well, before we go, Nigeria's Employers Consultative Association has applauded the federal government over the newly announced 15% import tariffs on petrol and diesel, saying the move is strategic and overdue. NECA's Director General, Mr. Adewale Smart Oyenrinde, in a statement in Abuja, described the policy as appropriate, timely, and necessary to protect local refineries. According to him, it is absurd that Nigeria, a crude oil producing nation, has continued to rely heavily on imported fuel, leaving 4 government-owned refineries unproductive. He said the tariff will promote value addition, conserve foreign exchange, and help Nigeria's industrialization drive. Serinde also noted that the policy could boost investor confidence, improve Naira stability, and accelerate progress towards energy sufficiency. He cautioned the government to avoid possible price distortions while ensuring regular crude supply to local refineries, especially under the current Naira for crude arrangement. Well, indeed, that's Business Nigeria for today. Thank you so very much for being a part of it. I'll see you same time tomorrow where we'll talk more business. Stay safe, enjoy yourself, and get the cash. I'll see you.